and gentlemen, with that, very quickly, we're also about to set the tone for our next panel discussion on changing landscape in financial inclusion. Firstly, I'd like to invite our panel chair, Mr. Yashraj Erande, who's a partner and director, the Boston Consulting Group. Can we have a round of applause? He focuses on the financial services sector and has significant experience in advising banks in the areas of business strategy as well as corporate finance. He's also the lead of strategy practice area of the BCG in India. And now I'd like to invite our panel members to please come on the dais. Firstly, may I please invite Mr. M.V. Tanksale, who's the CEO of IBA. Can we have a huge round of applause, please? Mr. M.V. Tanksale assumed the charge as Chief Executive of the Indian Banks Association on 1st December 2013, and during his long, illustrious career of 39 years, he served 3 major public sector banks. Our next speaker for the session is Mr. Rajeev Ahuja, Head Strategy, RBL Bank. He comes with more than 24 years of experience in the investment banking and financial markets in India, Singapore, as well as Hong Kong. Moving on, our next speaker for the session, Mr. Anil Jaggia, CIO, HDFC Bank. May I please invite Mr. Anil on the dais as well. He started his career in India with Citibank, and he's a senior banker with over 20 years of experience in banking worldwide. Our next speaker for the session is Mr. Yogesh Gupta, Senior Vice President, Bajaj Allianz Life Insurance. May I kindly also invite Mr. Yogesh Gupta on the dais. He comes with more than 16 years of diversified work experience, out of which 9 years have been spent in life insurance. Can we have a warm round of applause to welcome all our panel members for another enriching panel discussion. And I'd like to hand over the proceedings to our panel chair, Mr. Yashraj Erande.
So, ladies and gentlemen, am I audible? Yeah. Okay. Ladies and gentlemen, welcome to this panel discussion on changing landscape in financial inclusion. The panel members have already been introduced, and needless to say, we have a high-powered panel which is really well placed to talk about this issue over the next hour or so with us. Very broadly, the structure is we will spend the next 40-45 minutes engaging the panel to share their perspective on a variety of topics that are linked to financial inclusion landscape. And towards the end, we will park 15-20 minutes to really invite questions from members of the audience. So as we go through the next 40-50 minutes, please feel free to jot down thoughts and questions that come to your mind and raise them to the panel towards the end of the discussion. So let me, in fact, set the stage by building on what Madam Usha Thorat mentioned in the previous address, that financial inclusion is really about moving beyond obligation and viewing this as an opportunity. And I want to make 3 specific points. In terms of opportunity, this is as topical and as timely as it could get. World over, and certainly in large populous countries such as India, poverty has reduced by almost half, which is basically the population that lives below $2 per day in real terms. Lot more people are knocking on the doors of moving beyond abject poverty, no access to education, poor access to healthcare, to actually moving into the mainstream. And this is as real and as topical as it gets. So that's the first point. The second is that this is large also economically, and some of my colleagues at BCG have written a really splendid piece of work called the $10 trillion opportunity, where they have studied and mentioned that this new to market customer which is coming into the fold will really present opportunities running into billions and trillions of dollars. And if you combine China and India, this is a $10 trillion opportunity. So purely in economic terms, this is really big from a new to market customer perspective. Needless to say, this requires new to market business models as well to serve. And the third point I want to make is not only that this is topical and large, but this is real and accessible. And the accessibility of this opportunity has been proven by multiple institutions globally as well as in India. We were just discussing earlier, Bank Rakyat in Indonesia is a great example. It's one of the topmost return on equity players globally in terms of mid-sized banks. Last time I checked in 2013, ROE is in the range of 30%. $40 billion of book in lending and completely focusing really on microcredit and microfinance. 30% of their profit really come from microcredit, microfinance. The business model is very different, but it is real. Closer home to India, I have many panel members who have done this extremely successfully and are doing this very successfully, so they will talk about that. But there are MFIs, there is Kshetriya Gramin Financial Services. These are all examples of proving the reality of and accessibility of this opportunity. With that, I really want to invite opening remarks from all my panel members, and I'll start with Mr. Tanksale. Mr. Tanksale, we are sitting here in the heart of the financial capital of the country, but the action is really somewhere else, isn't it?
That's true. Let me start with, and I've been the beneficiary of listening to the earlier panel than Mrs. Thorat, and having spent 4 decades in the banking sector, I think for me it's absolutely not a new activity. Probably right from the nationalization and thereafter the regional rural banks pushing the lead bank concept, and thereon a very structured way of looking at the financial inclusion, as rightly told by Madam Thorat, as a Millennium Development Goal of the G20. I think it's all being driven, and if you really want to measure it from a positive side, substantial achievements are there to be really reckoned. But then, issue is that today everyone knows the problem. Who should really address the problem? Where does the problem get addressed? Who should really be at the execution? Are they being really addressed the way they should be? And to my mind, it appears that probably enough is enough. Unless you are reaching to the district level as a unit, as you rightly said, the engagement at the panchayat level. You have a fantastic institutional infrastructure at the district level called the lead district manager. Each district is in the hand of a bank called a lead bank. You have office of the NABARD out there. You have the district collector as a chairperson for the district level consultative committee, where probably everybody, all stakeholders sit together. And I think that is the forum which really needs to be driven. Second, what happens that should the financial inclusion be a job of only the financial system? Or should it be all the stakeholders in the ecosystem? I feel very strongly that it has to be done by all the stakeholders in the ecosystem, be it telcos, be it service providers, be it corporate BCs, whatever you call them. And I very strongly urge through this platform to the Economic Times itself and many other event organizers that shall we start with doing certain events at the district level and engage the district audience and district people, what exactly they need? Because unless you are really looking at the need of the people whom you want to serve, your delivery is not complete unless it is a need-based delivery. And I very strongly appeal that for that, you'll have to create an environment of a pull. It won't really go with the push. We have done enough through the push model. Access has been created through the Jan Dhan Yojana and all other initiatives taken across by the banking industry. Today you have got the MFIs, you have got the NBFCs, you have got the banking sector, you will have payment banks, you will have small banks. The RRBs have been in the place for a long, the strong cooperative sector, and all these sectors are on a strong technology. Let me tell you, all RRBs are on core banking, all district cooperative banks are on core banking. And thus technology could be substantially leveraged at the district level itself. I feel that my opening point would be that please go back to the district level to make it really what you call sustainable and a business opportunity.
Right, that's perfect. I think the action is really that there. Anil, let me try and bring you in on the opening remarks. Financial inclusion as a topic has been around for a while, certainly from the previous decade. What's different this time?
Well, there is no one thing that's different this time, but it's really a whole slew of measures. And I personally believe that financial inclusion is not quite restricted to just opening an account and having an account. And I think the great thing we see here is the urgency and the focus from the government, and they have not just focused on the account opening, which is clearly the first step. They have also focused on making the accounts active. So there is clearly DBT is one such push. They have from the beginning leveraged the linkage and hooks around insurance. There is now, of course, a good push around giving credit to an account based on certain criteria and conditions being filled. So these are some of the great beginnings that have happened in the last few months of with the increased, enhanced, target-based focus of the government. Beyond this, I personally believe that all this is good, but we also need to look at certain other factors which is really, some of them are the softer factors, which is education. Now, financial education, government has talked about it. I also believe credit-related counseling and education is a very important facet. But ultimately, while the poor have savings, no doubt about it, and like all of us perhaps in this room do, we have savings and we have borrowings for different purposes. Many people would have savings and fixed deposits, at the same time would borrow for a home loan. So people at this strata of the economy also are savers and borrowers, but they are net borrowers. And you will not complete the whole picture of financial inclusion till the credit from the organized sector reaches the people who are quote-unquote financially excluded today. And that is where our bank has been focusing in a very concerted manner. We have a program to reach out to and lend to 1 crore, 10 million distinct women, and we have reached 3.6 million so far, and we will reach, I'm sure, in the next few years, our target goal of 10 million. And when we reach there, it's not just the lending that we do. You know, first of all, we make them comfortable about the banking system, which means at the time of disbursal, of course, we reach out to them in the village, we engage with them in the village, in their home. But at the time of disbursal, we make them, all of them, the entire group of 12, 14 people, each of the women come to the branch. We make them comfortable with the bank. We make them comfortable with the ATM. We get them to withdraw the loan from the ATM. We encourage them to come to the branch every month to make their EMI. So they have to get comfortable with the banking system. And there's a lot of soft elements to this, which is get the people to feel that, listen, bank is not some great entity that they have to be wary of. Insurance is a brilliant linkage. Every loan that we do has tied in, most of the loans have tied in with an insurance, not just for the lady of the house, but also her husband, because they are a combined economic unit. Micro savings don't happen by themselves. They have to be encouraged, people have to be handled, and even here, for all the people who borrow from us, our goal is that they should start with a recurring micro RD. We don't succeed all the time, but our efforts continue, and we at least make about 15% of our borrowers, we encourage them to open a fixed deposit. So I think to sum this point up, the holistic gamut of financial inclusion is required. I think what the government is doing is great. The steps that they have taken, the focus they have put in, and it's relentless, constant monitoring. So it's not just that there's a policy intent and they're stopped at that. It's every week there is a video conference that the Ministry of Finance runs, which all the banks need to participate in, and it's focused of, what have you achieved, what is not achieved, what is working, what is not working. And, I'm very encouraged by what I see.
I would just like to supplement on what is said that, see the Pradhan Mantri Jan Dhan Yojana, let's start with that. That itself has been divided into phase 1, phase 2. And the phase 1 has been achieved, and now we are migrating to the phase 2. The kind of a monitoring and the kind of engagement which the banking system has with this activity is that there is a video conferencing happening. Even right now we are sitting here, but the video conferencing happens every Wednesday between 11 to 2, and all the bankers who are actually participating, maybe around 40 odd bankers, they sit through, and I represent as IDBI person. On a micro saving, see 30% of the account out of 11.5 or 12.5 crores have contributed 10,000 crores of deposits. So if you just multiply, if all the accounts are made, active, you can easily say that 30,000 crores could be amassed to that. And those kind of opportunities are there. On the soft skill, a lot is being done. I will share with you when my other speakers join on what are the things that we are driving from the bank industry level. Please.
Thank you, Anil. Thank you, Mr. Tanksale. Clearly, at the concept stage, the point you're making is that it's more comprehensively thought through. So it has all the legs or pillars in place, and the military-like discipline in terms of video conferences, engagement, and just a regular focus. Both these things are making it different this time. Anil, you made an interesting point about the softer factor, building comfort, education, literacy as being the magic sauce of making this work. I want to bring in Yogesh, and Yogesh, you have been doing a lot of creative things on the ground on this specific issue. Could you shed some light on what are your learnings and what are you doing about it?
Yeah, being an insurance professional, I will talk about financial inclusion through insurance. Insurance is one of the 4 pillars of financial inclusion. So far, financial inclusion, we have been discussing about financial inclusion, but financial inclusion typically means our understanding till now is it is related with banking, related with credit, remittance. But since this PMJDY announcement started happening since last 1 year, insurance also started talking about how this financial inclusion is possible. Banks opened 12 crores account in since August and till January. There is a linkage of insurance as well here. Life cover is there, accidental death cover is there. So there is an inclusion through insurance, whether it is for life insurance or general insurance. Insurance itself is a very difficult proposition for this segment. It is not only difficult for rural but also difficult for urban as well. Insurance always has been treated as a push product. You can see the type of penetration in India. The type of penetration for life insurance industry is only 3.7% so far, whereas the rural penetration of life insurance is hardly 1%. And if I go further beyond health insurance penetration, it is 0.25%. It shows the type of the market available and the type of financially excluded our population is. 70 to 75% of Indian population is still excluded from some or other type of insurance product. So we also, as an insurance company, we started this financial inclusive initiative in 2008 when we did a lot of focus group discussions and pan-India with a lot of intermediaries like microfinancial institutions, rural banks, RRBs, cooperative banks, and similar credit cooperative societies and fisheries board, milk boards, tea boards, and all this, the micro and mass market segment. Basis the survey and all this report, what we observed was, the type of product requirement was different than what we are right now availing in urban market. These people, they need right type of product. They need, a lot of flexibility in the product in terms of premium payment, in terms of, the non-forfeiture clause if somebody is not able to pay premiums on time. And for explaining them the benefits of insurance, it is not so easy to go and explain and enroll this customer directly. So what we have done so far, like in terms of financial literacy and awareness program, we have created a lot of in-house, this awareness programs. Very popular are like Nukkad Nataks and street plays and all. We explain insurance through such a type of using comic characters by some, the various vernacular languages, street shows and all. So we explain these people what is insurance, what is the pooling of funds, what are the benefits of taking insurance, and what are the pros and cons of taking not taking insurance. So through this we started creating awareness, and after this awareness and program to our intermediaries, which is MFIs and rural banks and similar type of associations, we started enrolling of customers. So what I say here is insurance always require a lot of financial literacy and awareness, not only for new business enrollment, not only for enrolling customer first time, but also it is required for your renewal persistency management, because at the time of second year, third year renewal, you always, insurance is a long-term product, life insurance is a long-term product, which goes up to 5 years minimum, 10 years, 20 years. So to give the best of the benefit to customer, you need to create a lot of such educational activity again and again to tell this customer what are the benefits. So we as a company, we did a lot of postcard, handwritten postcard activity. This is something very unique in the world which we did as a company. Why handwritten postcard? One reason, if we send something through company centralized system, company head office is in Pune, Mumbai, and if we are dispatching something through courier or speed post, it will not reach to the last mile. In case if still it reaches, the technical language written in the letter will not be able to explain them what exactly we need to address, and the type of cost involved for sending the centralized courier or the speed post. So as a company, we started this handwritten postcards, which gives very touchy message, and it only costs 50 paisa. And if the product is 100 rupee or a product is 500 rupee, you cannot incur expenses of 100 rupee for renewal chasing and all. So by sending 50 paisa postcard, it reaches to the last mile. And we dispatch such type of postcards centrally, not centrally, decentrally from various states. Just to give you an example, if you want to dispatch to the various part of the Uttar Pradesh, we dispatch from hubs like Lucknow, Varanasi and all. Places like in Rajasthan, maybe the Jaipur and all, where if we dispatch postcard, it will definitely reach on time. And being a handwritten postcard, it gives very touchy message to the customer and a direct message. And also we do a lot of drum beating announcements in the villages to give them the message of the pendency of the renewals, and they have to submit renewals where and what are the timelines and what are the benefits, non-benefits, discontinuity and discontinuity of the risk if the policy is not revived on time. So such type of programs, like as a company, we has initiated.
I think that talks very well to the point of creating a pull from the grassroots level by creating awareness and comfort around this financial inclusion into the formal sector. Rajeev, you are in a unique place. In some sense, RBL is born again. There's a challenger mindset, and it's very different from an incumbent such as HDFC in terms of the resources and how we are approaching this entire issue and opportunity around financial inclusion. So I wanted to bring you in to talk about how are you thinking about, and how as a challenger, how are you thinking about capturing this opportunity, given that awareness is being created and given that there is a significant push?
Thanks. Maybe I'll just give a recount of our personal journey, and this journey started actually 4 years to this month when we started our transformation. So one innate belief we had, and your $10 trillion report wasn't out then, but one innate belief was that what's happened to the Indian towns and cities across between early 90s till early 2000s, because of the intervention of formal capital. I mean, take housing for example. I mean, how many of us could afford a housing loan or had access to a housing loan before some of the modern institutions came in and drove the pricing down, and you had good credit infrastructure? So there was a basic belief that this would actually get reflected in the semi-banked, unbanked, underbanked segments, and the speed of this is going to be far greater than what we witness in the cities and large towns. Because you've got scale, you've got experience, you've got technology, mobility. So that was an innate belief. The second point was that you cannot approach this segment as if this has already arrived. So, there's enough experiences of working in Mumbai's, Delhi's, and Pune's, and Kolhapur's of the world where we are born. But you have to go back and say, what is the customer in the geography requiring basis their situation today? So we actually started looking at customer backward, and in the management jargon, customer-based business strategy. So literally we said, this is what the customer is aspiring to do. This is how we can reach the customer. And the journey from here on will be traversed by both. So the customer's aspirations will increase, and so will we increase our capability. So that was the second kind of recognition, and that led to creation of a bank within a bank. So much as we would like to call ourselves a challenger, we're also an urban wholesale, retail, business banking bank. So we created a very distinct unit within RBL, which was only tasked with development banking, financial inclusion, and agri. Actually, agri is a big part of our entire initiative as well. The staffing of this unit, the technology of this unit, the process, the partnership mentality was totally distinct from that of the broader bank. And I think that, if I can go back and say, one potential reason for our success, or modest success at that, was to make it a very distinct unit, because when you are growing a bank, you have 100 different priorities which are hitting you day to day, and especially if you're a listed bank. How do you ensure that this gets the kind of management attention and resources, because this is a long-term opportunity? So that was the third point. The fourth point, in terms of execution, our belief was, let's go in with a simple product, because you can't go and create the whole ecosystem on day one. But the belief was the ecosystem was being created through better technology, better partners, mobility, and the regulatory environment, which I believe has been a big, I would say, critical catalyst for this growth in the last 2 years. So we started with simple products, did a lot of experimentation and failed. So the learnings of that were actually, kind of organically built. I can tell you, for the first 2.5 years, our portfolio grew from 0 to 100 crores, yeah? And we had about 100,000 customers, direct customers. In the subsequent, so about 18 months, we have grown our portfolio 10 times. Now, that growth hasn't happened just because we were ready. It was because we had made those costs and experiments in the first 24, 30 months, which made us understand what the ground realities were. So today, 25% of our business comes from the financial inclusion area, which means, the SHG, JLG, and micro enterprises. 25% of our people are engaged in this. It is modestly profitable. We have 1 million customers directly interacting with us, and about another 500,000 through our partners from the remittance platform. And we believe this can grow up to almost 35 to 40% of the bank in the next 3-4 years. The other thing is the mindset, and Anil talked about how they're doing it. We were such a small bank, we could not afford to do it all ourselves. In parts of Maharashtra, Karnataka, where we have historical branches and understanding and social capital of being Ratnakar then and RBL now, were areas which we leverage ourselves. So we said, we can't go to an MP, Rajasthan, Chhattisgarh, Tamil Nadu, and hope to do this ourselves. So we partnered with BCs, and 2 of them are in this August gathering, where we said, can you become a strategic partner with us? So a BC is not a DSA for us. So a BC is not a staffing company. A BC is somebody who expands banking access, is a representative of RBL in that particular village. So some of these friends of mine will verify that we had 6 to 8 months of discussions on ops, risk, technology, process collection before we started dealing with our business. So I think the partnership mindset is very, very important. And the other thing is, we are creating customer aspirations. Are we going to get only doing yesterday's product? So there's a constant product innovation required, and it's very geographical based. You can't have one product fitting all over India. So that has to come from the bottom up. So we do a lot of financial literacy, but we also do post, credit intervention, what has happened. So the idea is to have a constant learning curve along with our partners and ensure that from a customer perspective, you are able to be seen as a trusted partner. So our renewal rates are well above 90% because people see us as somebody who's there for the long haul. So these are things which we went through, and I think today the ecosystem, I can safely say, is at a very good inflection point, because I think Mr. Tanksale said about the PMJDY. I think the fact that you can have DBT transfers come in and make the operation of the account a lot more interesting for the users, which was missing for the last 4 years. So I think all of this bodes very well. I think we just have to be careful about the fact that actual needs of the customers are rising and becoming very different. We cannot just assume that what we did for account yesterday, and I'll give you a very interesting incident. In our Kabnoor branch, that was our first financial inclusion branch. So a lady had gone through 3 cycles of credit. So we went and met her, and we had 30, 40 ladies come to our branch, and she said, look, I've been your customer for 3 cycles. And she knew exactly what her score was. She knew exactly what she was paying. My business has gone 3-4. Till how long can I be part of a JLG? I want a lakh of rupees because I'm buying clothes from a village and selling to a small town. Now, if we get stuck in our product definition of what we've been successful at, you're going to lose this client very quickly to a small finance bank or to the money lender. So I think it's very important for us to not rest on what has happened yesterday, because the population expectations are far, far more than what we can deliver today.
Great points made. Clearly putting customer at the center of it and being dynamic to the extent that you have to be in tune with the reality of the customer's needs changing. And then you also said that this is a strategic exercise. So you can't have, to what Madam Usha Thorat earlier mentioned, it's not just a quarterly mindset. You need to take a long-term bet, you need to build platforms, and you need to engage with the ecosystem to make this work. Anil, from a large bank's perspective, what does it take to make this work? What has been your experience?
Well, one point has been covered, and I'll just reiterate that, is that this can't be an adjunct to somebody who does something else. So we have 2-3 distinct groups within the bank. They're my colleagues here from our rural initiatives group, who have done some wonderful things focused around supply chain linkages in the rural economy, whether it is milk, so work around milk cooperative federations, and there is a great initiative which is called Milk to Money ATM, where you come and put in milk, it measures the quantity, the fat content, and works as a program linkage with the cooperatives, wherein they say, okay, so much money has to be credited. The money gets credited, and the farmer withdraws the money from an ATM. We worked with a large number of buyers of agri-produce, where the payments are again made to accounts which are held with us by farmers, and then they withdraw using a micro ATM or a regular ATM. We have a dedicated sustainable livelihood initiative. It doesn't make necessarily money and profitable in the way Madam Thorat talked about yet, but it's large. For us, we're a large bank, and we can't be just doing things at a certain level. So we are disbursing into the microfinance, whether the SHG, JLG sector, close to about 400 crores a month, and that's big for us. And the financial inclusion, the Jan Dhan side, we again have a dedicated team who are focused at doing this. So it's really thousands of people who are doing this full time, and that's all they do. And that's what is required. Without that, it is not going to happen. I just want to, you asked me a question. I just want to make one more thing, which is very important. And again, the steps have been already taken in that direction. Is that today, when an account is opened and there's some money comes in the account, there may be some micro RD that let's say the account holder subscribe to. But by and large, the tendency is to withdraw the money and keep it, in the house, under the mattress, or wherever. Till the seamless payment mechanism comes in, which is a lot of works already NPC has announced, a payment architecture where somebody can very painlessly, for micro payments without very complicated overlay security measures, make a payment to a kirana shop, to our friend, to somebody she buys threads from, somebody she buys embroidery material, whatever she buys for whatever they do, livestock feed. There would not be that much incentive for the account holder to not to keep balance in money in account. So that is all evolving. I think it's only a matter of months. That's the way. Once that happens, we'll see. At least I believe that the accounts will truly become accounts and not just a conduit for transferring the DBT and then immediate withdrawal.
Right. So, Mr. Tanksale, if we hear all our banker and insurance colleagues, clearly a lot of effort, a lot of positive vibes. But with your vantage point of being at the helm of IBA and looking at the wider canvas, I think you would agree that the heat map of India in terms of financial inclusion is quite polarized. It's not as geographically spread. People seem to identify opportunities in pockets. What's your perspective? What does it take to make this accessible really to everyone?
Let me give a little macro picture of we in the country have got roughly 700,000 villages and 120,000 banks branches. But out of 120,000 banks branches, 60% plus should be in the rural and urban, semi-urban areas. So I feel that around 70,000-80,000 centers are covered in the country. Rest all are the unbanked areas. But then to add to it, you have got 1,25,000 BC agents, which are fixed point BC. Let me tell you that we are operating on a concept of a fixed point BC and the mobile BC. So under a concept of sub-service area, we are ensuring that every area with a radius of 10 kilometers is really served through a fixed point business correspondent agent. And then to link it, the mobile bases are there. I mean, with this kind of a infrastructure having created, what is very important, whether this infrastructure can really deliver. What we have really tried to ensure that whatever devices on technology they are using, we are trying to upgrade all these devices to ensure that they are totally interoperable. There is some kind of a barometer which has been raised by the IBA, as I am at the helm of the IBA, that each device has to comply with that so that it can take care of the rupee card, it can take care of the biometric transactions, it can take care of the eKYC, it can take care of the other features of the ATM like the small mini statements and so on and so forth. But then what happens that your device is ready, but your person, the BC agent, is really equipped to do that. So at the IBA, we are actually addressing the capacity building of BCBF in a big way. We have decided, already the trainers training has started from Indian Institute of Banking and Finance, where, as Mrs. Panse told, you have an infrastructure of RCTs and FLCCs at the district level. I'll go back to the district level. Let me tell you again and again, Yashraj, that now time has come that we'll have to look at a small unit. Let the district collector and LDM operate as a CEO for a district. Let them really see that whether it is sustainable and economically viable at the district level instead of talking at the bank level and state level and country level. Let each district say that yes, this is my efficiency, this is how I'll really operate. Having created so much of infrastructure, if you really, as you ask, geographically is it skewed? It's totally skewed. You look at the SHG, 60% SHGs are operating only in 4 southern states of the country. 40% are operating in the rest of the India. Look at the space, look at the population. It means somewhere something is really amiss. I say that in the banking or financial system, when I admit as a banker that there is a space for a banking industry, there is a space for NBFC, there is space for MFIs, there would be space for payment banks, there would be space for a small bank. But unless these are complementing each other, what I will say collaborative competition, it will not help. If I am looking for a creamy layer business, because I want to be in the business, I have to have a return on equity. When I am putting 100 crores, I want to look at the return on my capital. I tend to go towards the creamy businesses. But I think the business in each geography, I heard the lady talk about Northeast not having the sufficient infrastructure. Maybe the Jharkhand, Bihar, maybe part of Uttar Pradesh must be having similar kind of problem. So all these players in the ecosystem should complement the activities and fill up the space geographically, and then I think to get into the business, the opportunity of DBT, what he said, 65,000 crore subsidies will be routed to the banking accounts as a DBT. If we have the capacity to really educate these people, there is a Pancha Sutra for SHGs. One of the sutra is to develop a savings habit. 65,000 crores, if you can really ask them to save 10% in the banking system, you get 6,500 crores. You have a small and marginal farmers. Only 45% of the small and marginal farmers are in the formal sector. 55% small and marginal farmers are still with the money lenders or some informal sectors? Can they be brought to the formal sector? A huge number of people can be really brought in. You say that 95% of the SMEs, MSMEs are in the informal sector. I think the opportunities are huge if you really want to make it a sustainable economic activity for the banking sector.
Right, right. So, very well said, Tanksale. This is really about democratizing even financial inclusion.
Sure.
And I'm going to bring in Rajeev. So, what's your perspective? What will it take to make this a genuine pan-India activity and expand the reach? You talked a little bit about different models for dealing with the diversity. How do we think about that?
See, I mean, I hate to be very prescriptive because I think we have enough rules and regulations out there. I don't think we need more of them. I think they're all in the right direction. I think the critical thing is the DBT, which allows money to be flowed in directly to the users. I think some of those things I'm assuming are going to be there. I think what we are embarking on is multiplicity of models.
Right.
Today, what is the biggest cost for us? The biggest cost is of people and of managing currency and managing information. So you think about, we all have, some hybrid platforms to manage currency. We're using stores, we're using mobile BCs, fixed point BCs to manage currency rather than having large branches and all. With payment banks, that will become even better. Because payment banks will allow us to have a clearing infrastructure, much like your telecom tower network. So typically, once they become embedded, you can imagine the interoperability will reduce the cost of currency management. And the third is information. And I think this is where a lot of work, I would say, is happening. It's not very on the surface, but for instance, all the loans we're giving across MFIs and banks are now being referred to credit bureaus. It's very early days, but I think what has happened in the urban segment on retail, I mean, if you see the last 6 years post the crisis, the urban retail asset performance has been a lot better because you have better information coming for client selection. I think that is going to lead to a lot of, I would say, reduction of asymmetry and cost of intermediation. So we will find geographies and pockets which frankly are unexplored. So, we started with Maharashtra, Karnataka because that was natural for us. We soon took the experiment to MP. And now we've taken the experiment into Rajasthan. We're looking at Bihar, UP. So I'm of the view that if you have many players here, comparatively and from a technology perspective, from a information perspective, we will find the opportunity. And I'm sure there's lots of work happening in Northeast. We haven't gone because we have too many things to fill around our current footprint. So I would say that, let this flourish, make the regulatory architecture a lot more stable. I think this moving in that direction, it will find its own feet and the opportunity will come calling for different business models.
Right. Well said, Rajeev. And if I connect the dots between what Mr. Tanksale said and what you are saying, there is a certain industry level utility which is common platforms which provides the scale and brings the cost down. And then on top of that, there is the multiplicity of model which really caters to the local customers' unique needs and so on. So that makes a lot of sense. Yogesh, if I bring you in on this issue of taking financial inclusion to the grassroots and to the nooks and corners of the country, you have been attempting this for the last 5 years, and literally every award, name is on your shelf. Yeah. So what's been your experience from on the ground? What does it take to take this opportunity everywhere?
For insurance company, major challenge is CapEx, capital expenditure. So while reaching, to this segment, you need to open your branches. And as an insurance company, the private sector especially is recently opened since last 14-15 years. So you cannot make your presence everywhere in the country. So you have to have some mechanism. So in 2008, when we started working with intermediaries and such rural partners, it was the start of journey, and today, after 5 to 6 years, we are on 70 million customers in this segment alone. And the best part is, the intermediary is actually helping us, to penetrate in this market. We are working with rural banks and we are working with MFIs, NGOs and all. So such intermediaries are helping us for reaching to the last mile. And it is also helping us not, there is no need for us to open our branches and our offices. And through their systems, like we are providing them right type of product. As when I said, we did a lot of focus group discussions and surveys before launching our financial inclusion journey. So after launching, what we realized, the right type of product has to be there. So we launched in 2008 our systematic savings product with a linkage of risk cover. So in that, the product was known as a SSS, flagship product of our company. So that was a systematic savings with coverage of adequate risk, which could be varied from 5 times of the premium paid to 100 times of the premium paid. Suppose if the customer is paying 1,000 rupee, he can opt for a 5,000 risk cover, and he can also opt for a 1 lakh rupee risk cover. And accidental cover is over and above. So the benefit is, if the customer is actually more keen for investment side, he can opt for 5 times. If the customer is more keen for the risk side, he can opt for the higher 100 times risk cover. And there was a flexibility in terms of premium somebody is not able to pay premiums on time because of whatever reasons, the non-availability of cash, non-availability of the the place where the renewal has to be deposited. So in that case, whatever premium paid will not be forfeited. So we have created a lot of such things and while designing this product, but right now this could be a challenge because of regulatory reasons. As I said, when we enrolled almost 70 million number of customers under our financial inclusion journey. So in savings side, we enrolled almost 10 million lives so far. But this product SSS, which was a flagship for us, is no more right now because of the regulatory reasons. And now the products are with a lock-in of 5 years as per the new IRDA guidelines and all. So my, the submission to regulators and the policy framework, this government to make this segment flexible, to give them a right product, give them a right regulation so that these people will get the right product on time and, from insurance company. Because the cost of distribution is very high and this business, if not sustainable for the insurance company, they will not reach. And for us, like we designed this product and we started this journey, the idea was always to make this journey sustainable. And for us, because we are right now with so much of business volume, we consider our journey as a sustainable business journey. Whereas we contribute almost, 25-30% of the rural market in our company in this journey so far.
The changing landscape in FI, what we are hearing is the initial experiments have provided a lot of feedback, both to regulators, government, as well as to market participants themselves. And there are innovations around all gamuts of the business model which are helping this work. But there's going to be more change as well, right? There is regulatory changes happening, small banks, payment banks. Mr. Tanksale, how do you think these changes are going to be structurally impact the nature of financial inclusion in India?
So I very strongly believe that all these, as I said in the past, that if they complement each other, they can do a wonderful job. And let me tell you that all along what is being discussed and talked about the exclusion on the banking, exclusion on the insurance, exclusion on the pension, and very systematically government has taken a drive. The banking access has been completed. Now the social security products are coming, your insurance products on what you call Jeevan Jyoti Bima Yojana, your Jeevan Suraksha, your Atal Pension Yojana. I think all these products are available. Now, what is very important, whether it can really reach and how it can reach. And as rightly said in the discussion by all my colleagues, that probably it cannot be done by one brick and mortar branch of the banks. You have to have a real good kind of system. You outsource the agencies, as RBL is doing, that MFIs are their agent for driving the activities. You have the corporate BCs who are operating on this. So if these activities are really carried forward, what we want to really look at from 6% availing pension to pension society, from very, very poor insurance penetration to at least a reasonable penetration to match with the Asian countries if not the developed countries. I think there are huge opportunities which we must explore, and I'm very confident. See, on the insurance side or the pension side, I would just like to cite an example. All of us in the banking industry in 2002, when we were asked to do the bancassurance, we were all apprehensive. But today 9 banks have got their JV companies for the life insurance, a few for the non-life product, and we are trying to see that the insurance products are sold to each and every captive client. We all become the POP for Solomon. Well, probably I cannot think so that as a big success story by the bankers. But then I think the way now we are trying to drive it, the Atal Pension Yojana, even the pension products will definitely reach, but all that is subject to as he rightly said, the soft skill. Your literacy work has to get in extensively, which cannot be job of one agency, which has to be responsibility of all the stakeholders in the ecosystem.
Thank you, Mr. Tanksale. I think we are at that point of hour where we would like to open the forum for Q&A from the audience. There are mics in circulation.
I think they are all hungry, so they will pass.
Okay, I have a question. Good afternoon, everyone. Am I audible?
Yeah.
Hello. Yeah. Good afternoon, everyone. I'm Richa Tripathi from Standard Chartered Bank. I quite agree with what Mr. Tanksale mentioned, that everyone, financial inclusion is not just a responsibility of banking system, but everyone in the ecosystem has to collaborate and work together. Talking purely from priority sector lending perspective, I think painting every bank with the same brush is also not right. And somewhere I think we've not really touched a topic on regulators, this start and stop policy of including certain banks and excluding certain norms and all is also not helping the cause. I think what is required is, and when we talk about innovation and certain solutions to cater to this financial inclusion agenda, collaborating banks, NBFCs, MFIs in solving this problem of priority sector lending is very important. Though we have tools like direct assignments, we have tools like PTCs, we have, now regulator is talking about priority sector lending certificates and all, but everything comes with certain riders. So when we talk about direct assignment route, we know that we have a cap of the lending, the end lending to the end borrower, that is with base rate plus 8% and all. When we talk about PSLCs, NBFCs and MFIs are taken out of that ambit. So I think somewhere this has to just weave in together, because I think it's very important for everyone to participate together. It's a huge white space which is there. And it's not that banks should be able to do it collaborative manner than actually competing with each other. When, insurance companies can sell insurance products through bank branches, why can't it be done together with, to solve this problem? Because at the end of it, over last 40 years, this PSL problem has not really gone away. Asking foreign banks to do agri-lending, 18%, and now including even the small foreign banks into that ambit, I don't know what is really, of course there's a thought process behind it, but I think there should be more solutions and innovative methods and models should be also encouraged to come into play to be able to solve this problem. Otherwise it's just a discussion topic in every forum. So that's what my observation was. It's not really a question to the forum, but I thought I might just bring out this observation to everyone. Thank you.
Thank you.
You want us to reflect or?
Yes,
okay.
please do that.
Because I thought you have brought out a problem as well as a solution. So I was very happy. But let me just tell you for the knowledge of the House that the Reserve Bank has already embarked on the redefining the priority sector lending, where the definition of the priority sector is getting enlarged substantially. And it's true that probably all the banks cannot be painted with the same brush. So each bank will have to evolve their own strategies to meet out these landmarks. But then the opportunities are there. Now the medium industries are getting into the fold of the priority sector. I think this is one area where every bank, whether it is a foreign bank or a private sector bank competing in the urban or metro areas, can really get into it. Then your rural infra is another area where you can get into it. Your cold chains, as rightly said by Anil, on the supply chains. But then the best part of it is that what I said is collaboration. where, let me tell you, there is a capacity with the MFIs to do on your behalf. The certificate, what you are talking about, I think that is the best way for the banks who cannot reach to the last mile. I think a lot of opportunities have been created, and I at the IBA, as a representative body for even the foreign banks, I've called for the comments from each one of you on the private sector report, that draft report of the Reserve Bank of India, and we'll be, if the banks who are sitting out here have not responded, please do respond, and it will help me in taking your voice to the Reserve Bank of India.
My name is Rajaram. I am representing urban-based microfinance based out of Bombay.
If you can come this side, we can't even see you.
I'll do that.
The lights are.
So my question is to the entire panel. Distribution is key. In all the discussion what came in is, if you have a product, you have a plan. If you can't mix and match the distribution with the product, what's happening is bulk of all the distribution is in urban. The 50, 60%, 65% of the rural people are not getting the reach. So my question to you is, we have all the bank branches put together, we have 1,25,000 branches. Add post office branches, 1,55,000. Add LIC branches and all the other insurers, you have another few thousand branches. Add MFIN branches, 10,000-15,000. Collectively, would you like to take all these branches put together to the rural mass? Can you be at the arm's reach of these customers rather than expecting them to come to your branches? Point one. Point two, can you be agnostic of being a bank branch? Can you be a branch of financial services to these customers? Meaning a bank branch, a branch within a branch, which can actually cater to all the financial services, agnostic of which bank customer this person is.
Please. I think I already answered you about the BC agents using the devices which are totally interoperable. It means they are agnostic of the bank. They are as good as your ATMs which are agnostic of the banks to which bank, who is owning. They are acquirer, there are issues about it. So, but if it comes to the lending side of it, I am very sure that you really don't have such a system where it could be agnostic of which bank you are going and you borrow from HDFC bank and make payment in RBL. I don't think that that kind of a situation is available. But then having created an infrastructure of BC agents, and you rightly said about the postal. Now if the Indian postal system comes as a payment bank, we will have 150,000 outlets. So
I'll just like to add, under the Jan Dhan, every village has been allocated as part of one or other sub-service area. And each SSA or sub-service area has been allocated to a bank. It is logical that if a customer is in that village cluster, they should bank with the bank which is allocated in that area. Why would you go and bank with some other bank? That's not logical construct. So I think the coverage has been made comprehensive. The construct is very good. You should bank with the, so at least the BC who is there also has viability. By doing this in every bank, if they take care of all the customers' needs in the areas allocated to them, from account opening to savings to lending to facilitating insurance, I think what you are saying will be accomplished.
I think the point being made about last mile is a real issue, and the enabling of BCs and the physical reach, of course, is one part of the puzzle. But this is perhaps a comment that warrants reaction from the panel as well as an audience. The other part of the puzzle is the telecom reach, right? If you have POS machines that don't work, network connectivity is a problem. Universal access deficit charges are being levied. What is being done to actually fix the last mile on the telecom side?
Let me tell you, there is a lot of integration between telcos and the banking sector, and that's how the product like Noop is in the place where even the smallest of the mobile can do a mobile banking. With regard to the connectivity, let me tell you that we banker raise these issues at all platforms. The BSNL or the other telcos who are representing those geographies, they are required to attend the SLBC meetings or DLCC meetings, or even the meetings which are conducted by the DFS, the Department of Financial Services, at the top level. So we are trying to bring a lot of integration of all the stakeholders.
Let us not forget, our job is to the art of the possible. So wherever there is a good, reasonably good network, let us do all that we need to do there. And then, the network will follow. To use a telco's line, I see. Yeah, not my line.
Shall we make it a last question now?
Good afternoon. My name is Sumit. I represent IndianMoney.com from Bangalore. Sir, in under 2 minutes, I have a couple of statements to make, one small suggestion with humility, and 2 questions. Now, we were all talking, financial inclusion, I think, in my limited capacity, I think it does not need too much of an effort. It is a byproduct of financial literacy. So if financial literacy is spread at a very accurate level, financial inclusion shall happen as a byproduct. That is one. 2, back in 2008, we are a company which provides financial education platform to spread financial literacy, and we are doing this from past 6 years. So back in 2008, when we were discussing this financial literacy as 2 words, we thought we are the only few people discussing about this in the country. It took a Prime Minister and one of the world's leading marketing icon to announce PMJDY, only after that we realized that there are a lot of people and bodies who are actually thinking very seriously on these concepts called inclusion and literacy. Now, I would want to ask a very important question to Mr. Tanksale Sahab, that the FLCs set up so far, okay, we make a lot of claims saying 2.2 million people have been educated, several FLCs has been set up. We did a small study. We went and did a small sample survey of few FLCs. We went and spoke to few people who have taken education from these FLCs. It is really hard to say that what we claim on black and white or through our websites is not actually what we go and find there. So there is a lot of difference. Now my first question is, can we re-look at what these FLCs are doing? Okay, can we understand whether these FLCs are really creating an impact? Because there are a lot of initiatives that we take, but what we fail each and every time is to come out with a measurement tool to understand the impact of the initiative. Now, before I have also read that there are a lot of FLCs which has been planned in the next 3 years to come. So can we create a mechanism wherein this impact of FLCs can be measured in a very efficient way? 1. 2, I often fail to understand why banks shy away from spending money on spreading financial literacy, because end of the day, I think it is only the banks which are going to be benefited on this. Last question, can we use the depository education fund which has been lying with the RBI to spread financial literacy, and if it has to be done, who would take the onus to take that initiative?
Fine. I think I'll reply your last question first. We have already applied to Reserve Bank of India that the IBA, as a representative body of the Indian banking industry, would like to avail of the support from this fund, because this entire money of 4,000 crore plus as unclaimed deposit has gone to Reserve Bank from the banking industry. So whatever they will support us for the financial literacy, we would like to avail it. And as I told you, that lot is being done towards creating a capacity at the field level in the BCBF, and then push the literacy part. We have done enough, let me tell you, in terms of creating literacy films, which are probably are supposed to be screened in the Gram Panchayats and the village melas and all that. Some of the places something, some of the places we are trying to push it that it should happen. So a lot is being done towards the literacy, and as the new products are being again inducted, probably the second phase of PMJDY, the total thrust will be only on the literacy part, so that there is an availment of these products by the individuals. Coming to the FLCC part, I totally appreciate what you said about measuring the impact of FLCCs. Let me tell you that our cities were created, and when we found that probably they also need to be measured. Today the our cities are actually graded. You might be aware that there is an organization, Hyderabad, and the Ministry of Rural Development and NABARD put together. They grade the RCTs, that's the ABC, looking at the impacts, and probably all RCTs are today maintaining a database at their computers. How many people have been trained out of trade people, how many people have gone for to become entrepreneurs, how many have taken up the employment, and I got the banking support. So on the similar lines, probably yes, I totally agree with you that some kind of architecture will have to be created to measure the FLCC's impact. FLCCs, as they are said to be, they are agnostic. They are supposed to be only driven by the lead bank, but they are meant for the entire banking industry in that district. I think how can we really exponentially take them to the last mile is the challenge. We have already engaged them towards the literacy part of, because there are about 300 to 400 BCs per district, and they are to be trained by the FLCC in charges. So I am very sure that their engagement is going to the last mile. I hope that answers your questions. I think we'll take the last one now. We have only overshot. I wonder what you are asking. I think let's dissociate two things. One is the DBT, where it is largely the interest subsidies and all that. What you are talking is a capital subsidy for the procurement, and it may be a state program.
Yes, sir. Yes, sir.
It is not definitely an all India program. If it is a state program,
yes,
the ideal way is to take up this issue at the SLBC level,
yes, sir,
where the capital subsidy invariably should get released to the loan account and should not go to the personal account or
yes,
savings account of the borrower. I think that's the established principle.
SLBC has given a letter to all the banks, but even though
I think it is a very specific, you can refer to me, this platform I should not, and you should not use for a specific.
Thank you.
Okay, so ladies and gentlemen and distinguished members of the panel, thank you so much for taking time to talk about and deliberate on this issue of changing landscape of financial inclusion. I think a fair summary would be to say that a glass that was full empty is now half full. At the same time, we have to take a balanced view and instead of saying it's half full or half empty, we have to recognize that...
I would only say please look at it as half full. That's the unfortunate part of it. We all want to see the empty part of it and not the full part of it.
Right.
So that's what I said, that what has been achieved by the industry over the years should not get ignored.
Absolutely. So the glass is half full indeed, and there is a lot of positive vibes that was evident on the panel. And then there are clearly some bottlenecks that we have to overcome as we go ahead to fill the full glass up. But thank you so much for your time.
Thank you so much. Thank you.
Have the mics on one last time. Thank you so much. All right. Ladies and gentlemen, may I please invite Ms. Sandhya Dhar, Sector Head TCL BCCL, to please present the mementos to our panel members. Firstly, to Mr. M.V. Tanksale, CEO, IBA. Mr. Rajeev Ahuja, Head Strategy, RBL Bank. Mr. Anil Jaggia, CIO, HDFC Bank. Mr. Yogesh Gupta, Senior Vice President, Bajaj Allianz Life Insurance. And our panel chair, Mr. Yashraj Erande, Partner and Director at the Boston Consulting Group. Thank you once again. And